Hey guys, welcome back. Coming back at you with another daily update video. It's Monday, June 22nd. The market just closed. It's 4:15 p.m. on the East Coast. And I had a good day. I was able to accomplish my goal of getting out of my Micron shares for a little bit of profit. So we'll talk about that. Definitely some missed opportunities today. I was watching the market all day long. And if you just take a look at the AMD graph here, again, we opened up in the green, pretty quickly came down into the red and traded sideways for half the day. And then I don't know what happened at noon. As far as I know, no news came out on AMD, but from about noon to 12:45, AMD just took off like a rocket. And the other thing was, it didn't just take off on little volume. There was a lot of volume relatively compared to the morning when AMD took off for those 45 minutes. So it's interesting that there's a lot of volume. I mean, there are a lot of buyers all of a sudden. So I don't know if this were institutions that all of a sudden decided that AMD was a good buy, or maybe some analysts or some big institutions upgraded AMD to buy. But I may have missed it, but some news must have come out that AMD was a good stock to buy, and that's probably why a lot of people jumped on it. But then once it rocketed up, it kind of traded sideways up in the green all day long. So I didn't open any positions on AMD because, like I said, this week I want to try and be as much cash as possible, at least so far. But, you know, if you had a cash secured put early in the morning, you probably would have been super secure for the rest of the day and hopefully for the rest of the week. Or if you had stock itself, I mean, you basically made $1 per share in less than an hour. So kind of a missed opportunity on AMD, but again, hindsight's 2020. But I just thought that was really interesting. And if we just take a look at the chart on AMD here, again, you know, kind of see we're still just straddling that 78.6% Fibonacci level here, trading a little, you know, just up and down, up and down, up and down all along that kind of like $50 strike price, or stock price, I should say. So again, you know, the same thing happened about a week to 2 weeks ago, where it just traded up and down, up and down, up and down. Then it finally took off. So, you know, I'm going to keep an eye on it, because maybe if the market looks stable tomorrow too, maybe I will open up a cash secured put on AMD, or maybe I'll even buy 100 shares, see how I want to play it, hoping that AMD is going to kind of rocket up again into this Fibonacci level, maybe get into the high 50s. I tried to see, just out of curiosity, what I could get a cash secured put on AMD was at the end of the day. And I would have to get in at about the $51 strike price to secure a 0.4% return on my risk. And again, 51, it's just, I've been in it for worse, but I just wanted to be more secure. So I'd love to get in below 50 at some point. So we'll see if AMD has a red day, maybe tomorrow or the next day, then maybe I can get in at like the $49 strike. So if I do get assigned shares, it's at a good strike price, in my opinion. We'll just have to keep an eye on AMD. We want to take a look at what I did with Micron. So Micron, if you remember from my videos the past 2 weeks, so 2 weeks ago, I had sold a cash secured put on Micron at $49.50 strike price, and I ended up getting assigned 100 shares on Friday, June 12th. And then I was kind of watching Micron all last week, hoping that it would get into like the low 50s, like 52, 53, so I could sell it off flat out, just sell the shares flat out and collect a few $100s in profit. And it was there early last week, but then the last, probably Wednesday, Thursday, Friday of last week, Micron just slowly kind of bled down. And then, you know, I didn't make any plays, meaning I didn't sell any covered calls. I didn't sell away my shares. So I ended up just held Micron all week last week and made zero money. But on the flip side, I didn't lose money either. I mean, I had some unrealized profits because Micron was trading at like 50 and some change. So, you know, I had some gains there that I didn't really lose, so I was happy with that. And I told myself, you know, this past weekend that I didn't want to make the same mistake, and I wanted to kind of get out of Micron as quickly as possible in case we are at the beginning of another dip, and I didn't want to bag hold those shares. So, you know, when the market first opened, Micron was green, and futures were also about like 1% up in the pre-market this morning. So I thought we were going to have a pretty green day, and I was really hoping that in the first 15 to 30 minutes of the market opening, that Micron was going to skyrocket up, and I was going to try and catch it like near the peak so I could just secure more profit and more stock appreciation. But the opposite happened, in that Micron, between 9:30 when the market opened, Micron was trading at $51.15, in the first 15 minutes, it actually went down almost 0.8% to 50.44. Now, even if I sold down here, I would have still been profitable, roughly $100, because I was in it at 49.50, and Micron was now at 50.44, so a little less than $100. But then in the next like 15-20 minutes, it came back up to 51.16. Then it came back down, kind of bled down. Then it started rallying back up, and so I was kind of watching it, hoping that it would rally back up to at least like the $51 levels. But it really wasn't doing it for the first half of the morning. So I said, you know what, I'm not going to make the same mistake again. Let me secure some profits, because I didn't want Micron to just bleed down all day long, and then all of a sudden I have unrealized losses. So somewhere around here, like around noon time, I was actually able to sell out of my Micron shares at $50.82. So I caught it, once I saw this little run up here around noon, I sold off like right about here actually at $50.82. So just to calculate some profit, that was $50.82 per share I sold it for. I owned them for $49.50. So I collected $1.32 profit per share times 100 shares. So I collected a total of $132 so far this week on Micron. So that's great for a weekly gain, because initially I had $4,950 tied up in those 100 shares. So if we just do like a return on investment, that's a 2.7% gain. Now keep in mind that that's essentially a gain over 2 weeks, because again, last week I just held on to the stocks and didn't make any money on Micron. So even if I divide that by 2, that's still an average of 1.3% per week over the past 2 weeks, which is a fantastic number again. But once I saw Micron was rocketing up, I didn't want to still like bag hold it or still hold on to the stocks hoping it was going to keep going up more. So I said, let me just cash out now, secure those gains, and then not have kind of remorse or regret about not cashing out sooner. But as luck would have it, Micron still kept rallying hard all the way up until almost 1 p.m. about 12:45. It was all the way up to 51.14. So I definitely left some profits on the table, but like I said, I'm okay with it. I accomplished my goal of cashing out. I got some profits, so I'm happy about that. And then the other kicker was, I knew there was going to be a White House press conference at 1 o'clock. So I wanted to cash out definitely before 1, because I didn't think that the market was going to like the press conference, because I know Trump held his rally this past weekend and there was a poor turnout from what I've read. And it seemed like people are going to probably pester the press secretary about that and some of the comments that the president made during the Trump rally. So I've kind of felt that the market was probably going to go red, or at least bleed off, at least during the presser and maybe after it. So I definitely wanted to sell off before 1 p.m. So I'm happy with my position. I mean, it's better than selling off down here when it was in the low 50s. And like I said, I secured some nice profits. And so anything better than a loss, I would have been happy with. So I'm happy with that. So as of right now, I am 100% cash for this week, because I had sold off my AMD shares last week. I did not get a sign of my IWM puts last Friday, and I just sold off my Micron shares. So I'm 100% cash right now, and I'm just going to watch and see. I didn't open up any new positions this week, but I'm going to watch and see what the market does, see if there's still a lot of fear in the market or things have kind of settled down. But that's what Micron did. And if we want to take a look at the graph on Micron on TradingView, again, it's kind of been sideways. We had this big run up and then it kind of popped down. But Micron's been trading in this blue between the 78.6% and 100% Fibonacci levels, which if you look back kind of historically, it doesn't really like trading, at least compared to the past few weeks and months, in this blue area. It likes more this kind of this olive green area. That's where it spends most of its time. So I think, based on its past kind of performance, personally, I think Micron is a little bit overvalued based on where it likes to trade. So I am kind of hesitant about getting to a put right now in case it does decide it wants to pull back and trade in these two Fibonacci levels. But, who knows? And the other thing is actually Micron has earnings next Monday. So Monday the 29th, Micron plays earnings. So the one nice thing about this week is that the premiums on Micron are going to be really good, because there's going to be a lot of volatility in the run up to earnings. So if I were to open up a put on Micron this week, expiring this Friday, I probably would get a very good return on my risk. So that's something to think about. So let's just take a quick look at, selling a put on Micron. I could probably get in, let's say $48 at the $48 strike. So $23, right, the premium, divided by 4,800, which would be my risk. That's right. So that's a little over 0.4%. It's almost 0.5%. Let's just try the 17. I think I might be able to get in at the 4750. So 4750. Right. So that's a little bit under the 0.4% that I like to kind of have as my benchmark. So I could get in on Micron at $48 in terms of a cash secured put and collect $23 in premium. But 48 is only $3 away from where it's trading at 51. So I'm still hesitant because if we have another, like even a moderate sized market pullback, I think there's a pretty strong chance that that's going to get tested. And if we look back at the graph, 48 is kind of right in the middle of this Fibonacci level. If it was below 46.50, if it was down here while Micron's trading up here, I would feel much, much happier. So we'll see maybe if the volatility increases tomorrow, if I can get in at a lower strike price, but I don't think it's going to happen. So I may just end up holding off on Micron for this week as well. But if we want to take a look at the graph on Disney, so Disney kind of rallied back up a little bit today. So it was at a low of roughly 113, a little under 114. And we actually ended up closing today at 116. So Disney had a nice rally. As of now, Disney has not announced any delays in their reopening of the theme parks. But I think that was some of the fear that caused the drawdown last week. So we'll have to see. But I'm going to just keep an eye on Disney, and I'm kind of a little bit reluctant to open up any position on Disney right now just because I think there's too much uncertainty, especially with the cases in Florida spiking. So it sounds likely, from a common sense standpoint, that Disney is going to delay opening because the other kicker is, let's say they do open on time when they said about 3 weeks from now. If nobody shows up to the parks, well, they're going to lose money, right? Because they're going to have all this staff working there. And if they're not profitable because not a lot of people are in the parks, then there was really no point in opening the theme parks up. So Disney, and then take a look at IWM. IWM also kind of rallied today, so it had a low roughly of about 139.65, rallied back up to close around 142 and some change. So IWM had a good rally here, but if you look kind of at the channel or at the trend over the past few days, it's kind of been slowly trending down. So again, kind of cautious about that. I'm not really sure if I want to open up another put on IWM if the trend kind of seems downward right now. So the other interesting thing, and I saw this posted today, was that SPY, the volume on SPY today was extremely low. The total volume on SPY was, I think, something in like the $40 million range. And I saw a statistic that the volume on SPY has not been that low since February of this year, I believe. So that tells me that a lot of people or institutions are kind of just sitting on the sidelines right now. They're not really getting into the market in terms of SPY. So that also makes me hesitant because you wonder, like, if people still think we're in a big kind of bull run, why are people not trying to get in on the action? So I wonder if a lot of people are just like me and they're all kind of trying to waiting and feeling out the market to see if it wants to keep continuing up or if we're at the top now and starting a downtrend. One interesting thing is if you've been following kind of the stock trading groups and things online like Reddit and such and Twitter, there's kind of been, I don't want to call it a meme, but there's been this like unofficial kind of benchmark that Microsoft like never hits 200. In the past, like at this point, whenever Microsoft gets close to 200, the market in general, the overall market tends to dip down. So if you actually look, Microsoft is at all-time highs right now. Pre-pandemic, the Microsoft high was around 188. So Microsoft is at all-time highs right now. And I bring that up because Microsoft actually closed 53 cents above 200. So we actually closed above 200. So if you kind of believe the I don't want to say the memes, but the kind of the hype out there, maybe this is the top. I don't know. Because it's kind of crazy to me that Microsoft is at all-time highs. I get that they're a tech stock and a tech company, and right now, based on what we're dealing with, that tech is really hot and they're still profitable. But it's kind of crazy that in this market and in the current economy, Microsoft is so profitable that they just hit an all-time high. So keep an eye out. Maybe we'll have a pullback tomorrow. Maybe tomorrow will be a red day because we want to take a look at the big board here. And this is from last week. I'll refresh it. So, a mixture of red and green. Tech was really big today, right? Microsoft, Apple, Google around 2% up. AMD was up almost 1%. Micron up 0.6%. A lot of tech was up today. So you know, it's interesting. Maybe we'll have a pullback tomorrow just because it gapped up, or not gapped up, but there was a big run up by a significant amount on these tech stocks. While like other stocks like healthcare, banking, obviously, they're all just down. So something to think about. If you do want to open up some puts, not financial advice, but you generally want to do it on a red day because you can get more premiums in at a lower strike price. So if tomorrow's a red day, tomorrow might be a good day for me to open up some puts if I decide I want to be in some plays this week. You know, one other thing that someone had mentioned before that I read, that if you want to look at the most popular stocks on Robinhood, there's a function or a feature where you can just go to the 100 most popular page and it'll show you the top stocks that were traded and how much, you know, volume there are and how many Robinhood users have them in their portfolio. So you just have to be careful because these are just the most popular stocks. It doesn't necessarily mean they're good stocks. So, you know, looking through this list, in my opinion, some of these are hype stocks and kind of meme stocks. I mean, and also some of these stocks like Ford is actually the top most popular stock in terms that over 900,000 Robinhood users have Ford stock. GE, American, Carnival, GoPro. And if you look at some of these stocks, especially the most popular ones, the things they all have in common is that they're relatively cheap, right? Look at number 1 and number 2 are less than $10 a share, right? GoPro, less than $5 a share. So that might also be a part why they're so popular, because there's a lot of new Robinhood traders, and obviously they don't have a lot of money or they don't have large accounts. So they're going to trade towards companies they know or heard about and also that are cheaper. So just be careful. I mean, Disney is the 1, 2, 3, 4th most popular stock on Robinhood, Microsoft, Apple, and you can see it says following because these are stocks on my watch list right now. But just going through, like, you know, some of these companies are good companies, right? Like Amazon, Tesla, Apple, Microsoft, right? But if you go down, there's companies that I've never, like Hexo, I've never heard of that. There's other companies like, I believe Moderna is a pharmaceutical company, and I think like right now, I think they were, if I'm not mistaken, caught up in a scandal because they announced a few weeks back that they had a vaccine that was working, and really it was kind of a lie. So now they're in trouble because they were just kind of trying to pump up their stock price, I think, or that's what's suspected, by claiming they had a vaccine. So some hype stocks here, just you have to be worried about. I mean, going down this list even further, there's stocks we recognize, right? Like ExxonMobil, AT&T, JetBlue, Netflix. But like Luckin Coffee, this has been kind of this meme stock, right? Because I believe a few weeks ago or months back, they were cooking the books and there was a big kind of fallout in their stock price because their numbers were not accurate. And then for some reason, people are still trading the stock, which personally I think is crazy because it's just a meme stock at this point. You know, what other stocks that I think are meme stocks? Ideanomics. I've never heard of this company. I don't know what it is. So things like that, you just have to be careful because just because it's popular, like Cosmos Energy, I have no idea what this is. I don't know if it's like an energy drink or what, or a power, like a electricity company, no clue. But you just have to be careful because although it's popular, it doesn't necessarily mean it's a good stock. But if you're just curious and looking for other stocks to add to your watch list, this could be a good place to start to see, because it truly, I mean, if it's a popular stock, then in theory, although it's not always true, its options should also be pretty popular and liquid as well. So just a quick way of kind of screening for potential new trades you may want to put on. But if we want to take a look at bar chart and the most popular options that were put on today, looks like Apple was most popular. So I don't know if you know, but Apple's WWDC conference was live this afternoon. So they announced obviously a lot of new features and innovations in some of their products. So I'm sure that's why this was one of the more popular options. And you can see that the vast majority were call options here. So that explains that. And then Microsoft, you know, I'm not sure if you saw the news, but Microsoft owns Mixer, right? Which is the equivalent of Twitch, or the Microsoft equivalent of Twitch. But they just announced that they're going to sell Mixer to Facebook, and it's going to be called Facebook or being incorporated into Facebook Gaming. So actually shares of Microsoft stock went up because of that announcement. So I don't know if Mixer was a money loser for them or what, but the sale of Mixer, selling off of it, that's actually what probably propelled Microsoft above 200. So that's interesting. AMD, you know, something was going on with AMD. I'll have to search, you know, what happened and why that stock just popped in the middle of the day. But you can see AMD was the third most popular stock, with the vast majority of people, like 79% compared to 21%, dealing with call options. So people are really bullish on AMD all of a sudden today. And I'll have to see what they saw or what they know that I don't know yet. But that was just another interesting thing that I saw today. And if you want to look at some of these other tweets that I saw going through Twitter. So again, I saw some interesting tweets while scrolling through Twitter, and I found this chart here where it shows the percentage of essentially boomers that have sold off all of their stocks between the months of February and May. So essentially during this kind of downturn and upturn, if you want to call it that, towards the end of May, between people ages 60 to 64, over 25% of them have sold off all of their stock. And the number goes up. People over 70 years old, over 30% of them have sold off all of their stock. And overall, it's about 18% of people have sold off all of their shares of stock. And this is per Fidelity. So this is interesting because probably if they sold off early, like February, March, they probably lost a little bit of money, right? Because that was when the economy was dipping hard. If they sold off later, like in May, end of May, they probably recuperated some of it back, so they probably weren't hit that hard. But I don't know if, I'll leave it up to you if you want to decide whether this was a smart play or not by them. But you have to keep in mind that these people are either retired or very close to retiring. And so they are not going to be able to live through, a 10-year recession or something where the market drops for 2 years and then we wait 4, 5, 6, 7, 8 years for it to come back up to where we started, potentially, right? So it might have been a smart move for them just to take what they can right now, and at least they have that money that's secured and safe for their retirement. So another interesting chart I saw here, this is the changing yield picture. So this is kind of the change in the percentage of S&P 500 dividends, and you can see that IT stocks this year have increased in terms of the percentage of total S&P 500 dividends. So it went from about 5% in 2005 to almost triple that in 15 years. It's been going up at every single time point. So on the flip side, you can see consumer discretionary has been down compared to 5 years ago. Consumer staples has also been down. Energy has been down. Financial has been pretty similar. Healthcare has been up. Industrial's down. Materials a little bit up. Real estate has been up compared to 2010. Utilities has also been kind of sideways, right? 6.3, 7.8, 5.46. So, however, the overall yield of the sector remains low. You can see it's only 1.2%. So there's kind of a discrepancy here in that it accounts for a large percentage of the dividends, but the overall yield for the sector is really low. So again, just very odd statistics that, again, makes you think, or at least makes me think that there's something screwy with the economy that just doesn't add up. Here's another graph. So this is the daily number of new cases in the US. So you can see, we're on this kind of uptrend. We spiked up, kind of slowly trailing down, which is what we want to see. And now we're back on this uptrend. So, keep an eye out. Maybe there will be another virus-infused recession or dip. So that's why I'm kind of playing it really safe right now and kind of being all cash this week and maybe next week as well to see what the market does and how, the economy reacts. Here's a graph showing the level of staffing in the United States in terms of unemployment. So you can see, obviously early this year, we just dropped precipitously and then we are kind of up on the rise. But you can see where this graph ends to where we kind of began up here before the pandemic, we are nowhere close in terms of reaching that same level yet. So, all these people that are saying like the economy is opening up back up, that's great, and that might be true, but we're not close to pre-pandemic levels yet. So a lot of people still unemployed. And actually, I read a statistic yesterday that I believe there's about 150 million people in the United States, right? That's the whole population. And I think still, if you add up all of the unemployment numbers over the past weeks, and including last Thursday's unemployment numbers of I think about 1.5 million new people that were unemployed or collected benefits, there are a total of roughly 50 million people that are unemployed right now. So, literally 1 out of every 3 people in the United States is unemployed. So, that's why I say it just doesn't make sense that we're in a V-shaped recovery when literally if you have a job, the neighbor to your left and the neighbor to your right don't have jobs, right? Because 1 out of every 3 people. So kind of scary. And then lastly, here's an interesting graph about the slowdown in spending, and it compares people that have a high income versus low income versus middle income. And you can see that, before the pandemic, we were all kind of, I want to say equal, meaning that's the zero level. And then once the pandemic hit and the market started crashing, the high income earners represented by the black line are the ones that cut their spending the most. And the middle income levels cut them the second most, and the low income people did not cut their spending that much compared to the other 2 income levels. And actually, the low income earners are pretty close back to baseline. So, it depends on how you want to interpret this, because obviously the high income earners are probably spending a lot more money in general, but this is all in terms of a percentage, right? So it's all relative. So it kind of makes me wonder if people are being smart with their money or not, in my opinion. But that tells you something, that these high income earners, which are probably like CEOs and like Wall Street executives and things like that, they've not really cut back or they've not really increased their spending back to pre-pandemic levels, even though of the 3 groups, they probably have the most capability to, right? Like if a guy that makes, or a girl that makes $1 million a year, spends an extra 10 grand a year, it's not really going to hurt them that much than if a low income earner spends an extra 10 grand a year. So just food for thought, but just some interesting graphs that people are putting on Twitter that I like to come across and I just find interesting. But like I said, in general, I'm kind of a bear right now. I think the market is due for another dip, especially because we are at pretty much all-time highs again, pre-pandemic levels, which just doesn't make sense based on all the data I've seen. So in general, had a good trading day today week, made some profit and cashed out all my positions for profit. So I'm right where I wanted to be. Ideally I would have liked to be here last week, but I'm fine with that. And let me know if you open up any new positions this week or today. Let me know what your plan is for this week. As always, if you have any questions or comments, leave them below, and happy trading.